Most small business owners know they should check their financial reports, but when you're busy running the day-to-day, the profit and loss, balance sheet, and cash flow reports usually get pushed to the bottom of the to-do list. But here's the truth, understanding these three reports is the difference between guessing how your business is doing and actually knowing. They help you catch problems early, plan for taxes, and make smarter decisions without just trusting your gut. So today we're breaking down the P&L, balance sheet, and cash flow statement, what they show, why they matter, and what to look for. Then I'll walk you through how an accounting platform like Xero can help simplify all of this with automatically generated real-time reporting and seamless collaboration with your accountant or bookkeeper. So let's get started. Let's kick it off with the profit and loss statement, also known as your income statement. This report shows three main things: how much money your business brought in, how much you spent, and whether you operated at a profit or a loss during a specific period. Think of it as a snapshot of your business's performance. It's not just about revenue growth, but whether that growth is actually profitable. When you read your P&L, there are a few key areas to pay attention to. First, you want to look at revenue trends. Are your sales going up, down, or staying flat month over month? Seasonal swings are normal, but unexpected drops are red flags. Next, you'll want to look at cost of goods sold, or COGS. This tells you how much it costs to produce your product or service. If COGS is eating into your revenue, it may be time to take a second look at your pricing or vendors. Then you want to review your operating expenses. This is your marketing, software, payroll, and rent, the essential expenses required to run your business. This is usually the easiest place to cut costs without affecting product quality. And finally, keep an eye on your net profit. This is the bottom line that tells you whether your business is actually making money. The P&L is one of the best ways to see how daily decisions like new equipment, a pricing increase, or hiring employees affect your actual profitability. Next up is the balance sheet, which shows your business's financial position at a single moment in time. Think of the P&L as a snapshot of performance and the balance sheet as a snapshot of financial health. Your balance sheet reveals whether your business is stable, overextended, or poised for growth. The balance sheet is built around one core equation: assets minus liabilities equals equity. Assets include cash, inventory, equipment, and accounts receivable, basically anything your business owns and controls. Liabilities are debts and obligations like loans, credit card balances, accounts payable, and taxes owed. Equity is what's left after subtracting liabilities from assets. Think of it as the value the business has built over time. When reading your balance sheet, start with cash on hand. Do you have enough to cover expenses for the next few months? Next, look at your debt levels. Are your liabilities growing faster than your assets? Then look at accounts receivable to see if customers are paying on time or if outstanding invoices are piling up. Finally, look at your inventory. Too much inventory ties up cash, but too little leads to missed sales. You can be profitable on paper and still run out of cash, which is exactly why you need to review your cash flow statement. The cash flow statement shows the actual movement of money in and out of your business, and it tells you whether your business can survive. This report is broken down into three sections. Operating activities show money earned and spent through day-to-day operations like sales, payroll, rent, and vendor payments. Investing activities cover things like equipment purchases, major upgrades, or selling assets. And financing activities include loans, repayments, credit lines, and owner distributions. Healthy businesses typically have positive operating cash flow, predictable inflows, manageable outflows, and a cash buffer for slow seasons or emergencies. Cash flow is how you make sure you can actually pay your bills, not just eventually, but right now. If your operating cash flow is consistently negative, that's a sign something in your business model needs attention, even if your P&L looks fine. Financial reporting seems complicated, but good accounting software simplifies the entire process. One of our favorites here at Merchant Maverick is Xero. Xero automatically generates your profit and loss, balance sheet, and cash flow reports using the transactions you enter or sync from your bank. Every time you categorize an expense or reconcile a bank feed, your reports update in the background. With Xero, you get real-time visibility, built-in accountant access, customizable reports, one-click favorites, scheduled reporting, and easy exporting and sharing. Xero keeps everything organized, accurate, and easy to understand, even for business owners who aren't experienced with accounting software. Let's walk through how to pull these reports in Xero, starting with the profit and loss statement. From the dashboard, click the reporting tab. We already have the P&L saved as a favorite. Scroll to income statement or profit and loss and click it. The date range defaults to January 1st through today, but you can adjust the range or use preset periods like this month or this quarter. You can also compare periods. For example, add a 1-month comparison to see changes side by side. Once updated, you can adjust the layout, add notes, save the report, or export it as Excel, Google Sheets, or PDF. To pull the balance sheet, repeat the same steps. Go to the reporting tab, select balance sheet, change the date, compare time periods, or filter by tracking categories. Under the More menu, you can switch between accrual and cash accounting or turn on account codes. Just make sure to click Update after making any changes. Just like before, you can edit the layout, add notes, save, or export the report. And finally, let's pull the cash flow statement. Go to All Reports and scroll the Business Cash Flow Summary. Click the star icon to save it as a favorite. From there, you can select the date range, compare time periods, edit the layout, save or export the report. And since it's saved as a favorite, it'll be easy to find next time. Xero keeps everything simple, fast, and transparent, even if reporting isn't usually your thing. Understanding your financial reports is one of the best habits you can build as a business owner. Your P&L shows your profitability, your balance sheet shows your financial stability, and your cash flow shows whether you can keep the business running smoothly week after week. Xero makes reports easy to pull, customize, and understand so you always know exactly where your business stands. If you want to start taking control of your business finances with Xero, check the link in the description. And thank you to Xero for partnering with us on this video. At the time of filming, Xero is offering 90% off for the first 6 months, so there's no better time to get started. Thanks for watching, Mavericks, and remember, the better you understand your numbers, the better you can run your business.